In these type of buyer's market, there is risk, but there is also going to be opportunity. The median asking price in the US right now is $425,000, but what they're actually selling for is $397, $30,000 lower than the list price. Hopefully, as an investor, you are seeing the opportunity here. Buyers have the power to negotiate. Now, there are some properties that you need to bid competitively on. That is true. But there are going to be a lot of overpriced properties. And that is exactly where this risk and reward comes in, right? Because you face that risk of buying something that you can get for cheaper. If the market's going to decline 2% or 3%, you need to be buying today 2% or 3% below what current comps are going for. That is the way that you balance risk and reward. You look for the opportunities to negotiate down, but you need to really make sure that you are driving down that price enough so that if prices go down, you're not left catching the falling knife. The strategy that you need to employ is to be patient. You really need to be willing to walk away from deals, run your numbers, figure out what you're willing to pay, and really stick to that. And if you do that, when things start to pick up again, that's when you're going to get a lot of appreciation, leveraged appreciation, which will drive huge returns for a lot of people. So that's the number one thing I would recommend around strategy is just negotiate and be patient.